Good morning, trading world. It is March 8th, 2023, and this is my pre-market outlook and technical analysis for day trading the markets. It's 8:32 a.m. on the East Coast. Let's get to the pre-market outlook. The title for this morning's pre-market outlook is "The Fed Dropped a Bomb, and now there is added pressure on all remaining data drops this week." All right. I have warned over and over and over again to stop trying to get ahead of the Fed and when they will begin to cut rates. I continue to say that inflation is and has not been in check like the majority have thought. The funny thing is that the Fed, in his prepared statement yesterday, has restated the obvious. Because of this, there will be a bullseye on the remaining data drops that have anything to do with inflation. That would especially be the ADP employment report at 8:15 today, the Jolts at 10 a.m. today, the Challenger job cut report that's 7:30 a.m. tomorrow, and the jobless claims at 8:30 a.m. tomorrow. This is all taking place while technically we are in a very dangerous blind spot. Back on the March 2nd pre-market outlook, I explained why this range was so dangerous due to the principle called variance and where we were in the cycle entering the weekly time frame. It's even more dangerous now because the major time frames are all becoming aligned in their rest areas. On smaller time frames, it's not that big a deal to go through consolidation, being the ranges are not more than a couple points, and we tend to get slingshot out of that consolidation into a breakout. When thinking about this on a monthly, weekly, and daily being aligned, imagine a consolidation zone of 12 plus points up and down on the SPY, then a breakout of at least that much. It becomes a big deal. The weekly market makers expected moves lower edge is at 396 and change. On the SPY, and in my opinion, we have come too close not to go tag that level. So I can see us reaching that level today and then consolidating around it or breaking through it today. This will leave us in a crazy position Friday. Normally, after a run like we had yesterday, I would be looking for a humdrum consolidation day, meaning a small, boring range. After looking at implied volatility, that does not seem to be the case. Implied vol is up today and Friday. The 9-day VIX has jumped above the spot VIX and the 3-month VIX. Those are all signs things are about to get crazy. So put your helmet on and buckle up. If we get below the lower edge of the weekly market makers expected move and break lower from that, forget about the Jack and Queen and King levels and think major channel levels, because we're going for a ride. Now, with all of that being said, let's get to the key levels and what to watch for today. All right, here we are with the key levels to watch for today. Starting on the resistance side, we have our Jack resistance from 399 to the 400 area. This is going to be very key if we can break through this area today. I do expect some rejection at some point that may start us over a couple times, but we may get going to the upside today. The next level, our queen resistance area is going to be 401 to the 403 area. And then we have our king resistance area 404 to the 411 area, just in case things do get going pretty strong. But right now 404 to 405 is where I'm concentrated on, and a kind of a target that I have for today if we kind of get going, and that's going to be an area where we meet some resistance. On the support side, our jack support area is going to be 398 to the 397 area. We got quite a few key levels to keep our eye on. This 398 to 397 area, there's a lot to be said. Our next area is going to be 396 to the 394 area. This is going to be our queen support, and this is also where the weekly market makers expected move is, that 396 area. So like I said, we've come too far not to get it this week. I don't know whether it happens today or Thursday or Friday, but I do believe we tag it at some point before truly being able to either bounce up or break away off of it. Remember, I said this has like a magnetic field. Even though it's at 396, we feel the power of it all the way up here at 398. And it has that kind of magnetic effect that once you're in its area, almost a couple points above and then even a couple points below, it's a very strong magnetic force that kind of draws us into it, and it's really hard to break off of. And you'll know when we get ready to break off of it, because you can watch the volume spikes on intraday charts. If you watch 1 minute, 2 minute, 5 minute, what have you, you'll see how volume tends to spike. I usually watch the 1 minute for something like this, and you'll see volume spikes on 1 minute above that 5,000 to 8,000 contracts per minute, and that will let you know that something's about to happen and we're about to spike off one way or another. The king support area today is going to be 393 down to the 391 area. The main thesis for today is bullish, closing above the 398.27 with a projected target high of between 399 and 405. The alternate thesis is bearish, closing below the 398.27 with a projected target low of between 397 and 391. The main channel that we're in is from 397 up to 416. The main channel below is 397 down to 379. Yesterday, market strength and breadth started with a gap down, popped up briefly, and trended down hard the rest of the day. I expect strength to open almost even, maybe a little lower, Actually, the way things are trending now, maybe even to it could be just a little lower or just a little higher. And pretty much consolidating at lower levels before turning and popping up briefly at some point today. We have a slight dissonance or harmony depending on how you look at it, because the technical side is 50-50. We're right at that line. That gives us no bias. And then the quant side is bullish. That brings us to the scenarios of the day. All right, today the scenarios, at least the first two, are pretty much a toss-up, but looking at it, this, as we continue on into morning, may grow up into a bigger probability, and that is our expanded range day structure. And I should have left the expanded part off because it's going to be pretty much a range day. If this happens, we could begin the day with a grind or strained push up, but pretty much consolidating in a range around either the point of control, which is right here around this 397, 398 area, or the lower edge of the market maker's expected move, which is around this 396 area. So we could spend a good part of the day consolidating, and then at some point later in the day popping up and grinding up off of it and getting a pop up for a bit, getting us our close above the previous close at 398.27. So that is our range day structure. All right, our second scenario is our trend day up, which is growing further out of favor as we get closer to the cash open. In the trend day up model, we would open with a gap up, start with a push back toward the previous close represented by the blue line, and from there we would get our uptrend of the day, that reversal there, and give us our uptrend for the day. We would find midday chop around either the possible queen or king resistance area. And usually the second half of the day, we usually start looking to continue the primary trend of the morning, but it ends up being a head fake a lot of the times and giving us a fade back into the close on this trend day up. I do want you to be on alert for a vice versa alert, which could happen. We could open gap down and end up having our trend day down, midday chop around either the queen or king support area, and then again a head fake a little lower to start the second part of the day, and then possibly a rally into the close. So that is a likely scenario right now, because we're pretty much stuck within the gravity pool of the market maker's expected move. So it's getting harder for me to see us trending as we get closer to the cash open, and the longer we stay within that gravity pool of the market maker's expected move. All right, last but not least is our rounded reversal day type structure. We could get a continued push lower toward the jack or queen support area, and find our midday chop around either the queen or king support area, and I'll say that midday chop would more than likely wind up around the lower edge of that market maker's expected move. And then to open the second half of the day, we could pretty much get a pop back up or rally back up with the same amount of force or energy as we came down with the first part of the day. That is our rounded reversal day type structure. Today you need to be on alert. Also, usually on a day like today, after having a day like we had yesterday where, for example, myself, I did really well yesterday. I made I made my quota for the week in one day. So a day like today, I would usually step back. There's no need for me to be in a rush to take any big positions, to do anything that would cause me to give back what I made yesterday. So I'm usually sitting back, watching lightly, treading lightly, not doing anything big on a day like today. And usually there's nothing big to be had on a day like today, but a lot of chop. And that chop will cause you to give a good portion of things back because you're looking for things to move when it just constantly, gives you the head fake like we're going to move, but continues to settle back down and chop and just eat your stops up. So that's a big part of the reason why I don't really do anything or look to make any big moves on a day like today. However, today it feels kind of awkward because usually moves like we had yesterday usually happen on primary expiration days like today. And it just feels different. I can't explain it, but knowing that today's a primary expiration, it gives me a reason to kind of stick around and watch a little more because it may give me a position that sets up for tomorrow. So we'll see. But right now, I'm not looking to do anything major. I'm not looking to do a lot of trading today for the simple fact that I did really well yesterday, and days like that you don't want to give back. So that falls into what I always say, your most important job as a trader, and that is to protect the capital that you already have or that you just gained. Be aware of the risk. You don't want to give back big gains. So as the saying usually goes, like I just said, your most important job as a trader is to protect the capital that you already have. We do this by knowing and understanding the risk that we have on in positions that we take. And I'm going to add to that in knowing the situations that we're in. And we manage that risk in accordance to our account size. Just another analogy about that, if you're a football team and you break off its first down and let's say it's second down and you break a decent, you get a decent play. You needed 10 yards for the first down and you got 8 or 9 yards on the previous play, and you just need 1 yard for the first down. If you got one down to go, you don't want to waste that down or waste a lot of time trying to throw a bomb. You just want to get the 1 yard and get the first down and be safe to start the next, the next down. Same goes in trading. You have a big day, you get your quota, your goal. You don't want to mess up by giving it all back, not being aware of the situation. You just want to, get out of the next day with something positive, or just sit on your hands because you've already made your quota for the week. So, same goes. Just situational awareness, be aware, and always thinking how not to give money back to the market. That is also a part of risk management. We've covered the scenarios for the day. As always, wishing you a positive trading day. Let's go out and make it a great one.